Have you ever found yourself in a situation where unexpected property expenses derail your carefully planned budget? It is a common challenge for property managers, but it does not have to be. Accurately forecasting rental property operating expenses is absolutely essential for effective budgeting and maximizing profitability. By understanding and anticipating these costs, you lay the groundwork for a stable and successful investment. The reason this forecasting is so critical lies in the dynamic nature of property operations. Expenses are not static. They fluctuate due to market conditions, the age and condition of your property, tenant turnover, and even seasonal changes. A proactive approach helps you adapt and maintain financial health rather than reacting to surprises. So, how do you actually do this? Start by meticulously reviewing historical expense data for your property, ideally going back 2 to 3 years. Group these past expenses into clear categories like property taxes, insurance, utilities, maintenance and repairs, administrative fees, and marketing costs. This historical insight forms your baseline. Next, differentiate between fixed and variable operating expenses. Fixed costs, such as property taxes and insurance premiums, are relatively predictable. Variable costs like repairs, landscaping, or utilities can fluctuate significantly. For variable costs, calculate averages, but then adjust for any known changes, such as upcoming deferred maintenance or new vendor contracts. Always factor in an inflation rate to account for rising costs across the board. Also, consider future plans for the property. Are you anticipating any capital improvements, like a new roof or upgraded common areas? While these are capital expenditures, they often impact future operating expenses, perhaps by reducing repair costs or increasing utility efficiency. Furthermore, include a contingency fund, typically 10 to 15% of your total estimated operating expenses, to cover unforeseen emergencies or larger than expected repairs. A valuable insider tip is to adopt a zero-based budgeting mindset for your operating expenses. Instead of just rolling over last year's numbers, justify each expense item from scratch every budget cycle. This rigorous process ensures that every dollar spent aligns with your property's current needs and strategic goals. Regularly review your vendor contracts too. Sometimes you can negotiate better rates or services. By diligently forecasting your operating expenses, you gain for more than just a balanced budget. You secure stable cash flow, empower yourself to make informed decisions about rent adjustments and capital improvements, and ultimately enhance the long-term value and appeal of your rental property. It is about strategic financial stewardship that leads to peace of mind and greater returns.